Okay, good morning, everyone. Trust we are doing good. It's another day today, and we are all on this call together. I'm so glad having everybody on this call. Yeah, good morning, Antonia. Trust you're doing good. Karachi, good morning. Kelechi, good morning. Ikena, good morning. Hope you all are doing quite well. I feel so happy and optimistic this morning, and I guess you guys feel the same also because today's webinar it's going to be very interactive, and the fact that I can now call you guys on here to talk and join me on the call, I would be doing a lot of that today. Okay, so if you've got questions at all, just comment in the chat and send in your question in the question section, and I would gladly invite you to join me on stage. So I'm your host, Akinwale Chibuike, and I believe everybody can hear me. That's why everybody's dropping a response in the chat box. Okay, so we have just 5 people on the call. Wow, but I still expect a large number of people to join us. With that being said, welcome to another webinar. Okay, today we'll be doing an AMA session, Ask Me Anything session, an interactive question and answer webinar on trading and earning from the financial markets. Okay, so remember, it's an Ask Me Anything about the financial markets session that we're doing today. So let's not ask anything outside the financial markets, okay? And yeah, at Eagle Global Markets, we offer you a lot of products, actually, a lot of products that would help you become financially free and a lot of money trading the financial markets. And those products are the first one is the cloud trade. Okay, the cloud trade is a platform where you can trade and earn money in your local currency, and the local currency is naira. Okay, you can trade and earn money in the local currency, which is naira, on our cloud trade platform. Okay, good morning, hope you're doing good. Also, we offer you another product, which is the MT4 platform, where you can actually trade and earn in a foreign currency dollar. Okay. Then the last product we have that we offer you is the copy trading platform. This is like one of the best platform. Kelechi is here. He can testify. Hope is here. She can testify about the platform. The platform is quite amazing. Okay, quite amazing, and it helps you earn without even doing anything. Like the normal concept, monkey they walk, babu they chop, like that type of concept where all you need to do is just put money, the right settings, copy the right trader, and start earning. Okay, that's how it is. If you are too busy to trade the financial markets, if you are somebody that works 9 to 5 and you're very busy, you don't have time to learn about the financial markets, or you can't trade yourself for a certain reason, the copy trading platform is there to help you, give you access to consistently profitable traders that would help you make a lot of money while trading. Okay, so Karachi has a question. Actually, I'll be inviting people on here to ask their questions, so there's no need to just type the question in, so I know, okay, this is what you'll be talking about. And also, if you are in an environment where there's noise, please let me know so I don't call you on the webinar we start hearing noise. Okay, so Karachi, you're on. Okay, I would be inviting you to ask your question on the webinar. So here we go, invite on stage, and yes, please do accept the invitation to join me on stage. Okay, please do accept the invitation to join me on stage, so we can talk, we can discuss your question, and everybody would learn from it. Okay, Karachi, I think you okay, great. Wow, great.
Good morning.
For Karachi, can you hear me?
Yeah, I can hear you. Can you hear me?
Can you hear me now?
Hello?
Yeah, can you hear me now? Can you hear me now?
Yeah, clearly I can hear you.
So let's do all to turn off our cameras if I invite you on here for security purposes, okay? So Karachi, your question, please.
Okay, I'm trying to really understand how to read the market in terms of, I would say, terminologies. For instance, you looked at a market, I think that was either 2 days ago or so, and you made a statement that said money is hanging in a region and it has to be collected. Ah, that statement is a very big, it sounded like a very big revelation. So, how did you get to understand that money was in a region and it really had to be collected?
Okay, so it all takes practice, okay? Like learning and learning and learning and learning. That was how I was able, like, there are certain areas you just look at in the market and you understand the tendency of that instance occurring, okay? So I don't just know, okay? I don't just know. It's because of I've studied the market multiple times to know that these things are bound to happen. I always tell everybody on the call to do well to go back to the left hand side of the chart. That whatever will happen on the right hand side of the chart has happened previously on the left hand side of the chart, and that's how you can determine how price will move or where price is going to in the future. Okay, so understanding what has happened previously, that price always trade to old lows and old highs. That was how I knew it would happen, or that was how I knew that scenario would happen. Okay, I hope you do understand.
Okay, yeah, yeah, I do.
Okay, so your second question, please.
What's the win percentage for copy trading on the
Okay, you
chart?
see, You see, um, those traders you want to copy, okay? Those traders you want to copy have a certain percentage or a certain ROI return, a certain ROI return that you would earn possibly over a span of a month or a span of 2 months. And when you understand that certain ROI that they would be earning in a span of a month or a span of 2 months, that way you are able to understand how you should position or project yourself. So if that trader tells you in a month he earns 100%, first thing first is not to believe the 100%. Okay, understand that the markets can't be merry every time. Okay, the markets can't be merry every time. So what you need to do is to now say, okay, if this trader is telling you that he earns 100% ROI per month, chill and reduce it to 50%, half of what he thinks. Now, understand that within that month, there's a tendency of you sitting on 50% of your trading account. But what I tell my clients generally, since you're not copying a single trader, you'll be copying span of traders, 2 to 3 types of traders. That's what you'll be copying. I would tell them to always anticipate 100% ROI in 2 to 3 months. 2 to 3 months to make 100% of your capital is not bad, and that's how trading or investing the right way works. Okay, do please unmute yourself. Okay, I kind of great. So did you
Okay.
get the concept of what I said?
Yeah. Thank you very much.
Did you understand what I said? Yeah, no problem at all. No problem at all. Thank you for joining me on the call.
All right.
Okay, so anybody else with a question? Sincere apologies for the break. It was from my end. I really don't know why internet connection has been acting quite a lot of ways these days. Okay, so I bet everybody can see my screen. And yes, I said I'll be calling on Abiodun um to give us his question because he sent in a question. Okay, so let me confirm which of the Abiodun so I don't add the wrong Abiodun on the call because I've got two here. Okay, confirmed, brilliant. So Abiodun, I'll be adding you to the call right now. Please join me and ask your question. Okay, so we're waiting for him to join us on the call. And also, you guys should please take notes. Okay, take notes of these questions that are being asked. I don't know, they might end up being quite useful for you. Okay, quite useful for you. So take note of the question and the response I give, so you can implement it whenever you're trading the financial markets. Okay, this is just like the questions I'm taking out is just let's just call it testing. Okay, just a tip of the iceberg of what we'll be delivering today. I know a lot of people have questions and they would like to join me on the call. So don't worry, you will find out. You will get to join me on the call soon. Just let's take Abiodun's question and someone else's question. Then I dish out the value I've got for everybody today. Then we move back to the question. Okay, so Abiodun, seems you're finding it quite difficult to join me on the stage. Okay, I will just cancel invite. Okay, so let me just respond to your question since you have the question already written down. So Abiodun says, what is the best time to trade the dollar index? Okay, the best time to trade the dollar index is the New York session. Okay, New York session. Why is it the New York session? Because that is when the United States market, okay, the American aspect of the financial market is opened. The New York session is how would I put it? Should I say 2:30? Yeah, 2:30 our time. Let's put it that way. 2:30 our time, because that's when the New York Q zone actually occurs, and that's the time to best trade the dollar index, because that's when money, volatility, and everything falls in place at that point in time. So the New York session is the best time to trade the dollar index. I hope I've answered all your question, Abiodun. Now, to what I wanted to share with you guys today. Okay, so I realized quite a few things after our last webinar, which was 2 days ago, and it was about the boy who made a lot of money trading the financial market, and the old man who made a lot of money trading the financial market. So I decided to dig further. Okay, I decided to dig further to create clarity to everybody, and if we can actually recall properly, our last topic was what? Anybody at all? Anybody at all? What was our last topic on the webinar? Our last topic on the webinar. Let's do well to drop it in the chat box. Our last topic on the webinar. The previous topic we had on the webinar. Anybody at all? Okay, brilliant. Managing risk. Managing risk. And you will remember, or you can remember properly, I said consistency, being consistently profitable comes to every trader at different time, right? Did I say that on that webinar? Yes or no? Or I said it on the Telegram group and I thought it was the webinar? Can anybody please confirm or affirm that I said it on the webinar? Because I remember I said it on the webinar. Okay. Now, coming to realize that, I wanted to let you know that there are different stages in life as a trader, okay? Or there are different stages a trader must go through when trading. Now, I want everybody to take a pen and a paper to jot the things I'll be saying. It's very, very important, you know. The first stage, before we go back to our Q&A, okay, there's a lot we'll talk about on the Q&A. You still get to ask your questions, but let's just discuss first before we hop into it. Now, the first stage every trader goes to or goes through is uncautious incompetence. Okay, uncautious incompetence. Uncautious, uncautious incompetence. Unconscious incompetence. I want to type it in the chat box for everybody. unconscious incompetence. Now, what really is unconscious incompetence? Can anybody tell me what they think unconscious incompetence is? Can anyone at all tell me what they think unconscious incompetence is? Anyone at all? Can anyone tell me what they think unconscious incompetence is? Just from the word unconscious incompetence. I'm waiting for response. Okay, I would love to get everybody response on this. No, not carried away by either profit or loss. It's also not okay. And gross errors, we can actually call it gross errors, but I wouldn't really take that. Okay, I wouldn't really take that. Lack of experience. I wouldn't really take lack of experience and knowledge also. But let me tell you what unconscious incompetence is. Unconscious incompetence, when it comes to being a trader, is when you yourself don't know that you don't know how to trade. Do we understand? Like, you don't admit to the fact that you don't know how to trade. Do we all agree to that? That's what unconscious incompetence is. You don't agree that you don't know how to trade. You are only acting like as if you know how to trade, but really deep down, you don't know how, you don't agree that you don't know how to trade because you don't know how to trade. That's the first stage you go through, and that's like the beginner stage where you start hopping from one strategy to another, one strategy to another, one strategy to another. You just believe you know all those strategies, but you really don't know it. And that's the first stage. Now, as a trader, this is the first stage that you will lose a lot of money. I know a lot of people are going through this current stage, but I just want to remind you that in the end, you will make a lot of profits and life will be good. The only way is up. Okay? The only way is up to profits. And once you accept the fact that you don't know it at all, you are just acting like you know it. Okay, unconscious incompetence. You now go to the second stage, which is cautious incompetence. Okay, cautious incompetence, where you now know that you don't know it. This is the stage where you now start searching for a mentor. You know that you don't know it. You want a mentor that will teach you, a mentor that will guide you, a mentor that will show you the ways, the arts of trading. This is the second stage. And this is the second stage where traders lose a lot of money, not to the financial market anymore, but to people, okay, to the gurus you see online that act like as if they really know what they are teaching, what they are talking about, but even they themselves, they are not consistently profitable. That's the second stage. Now, the third stage and the fourth stage, you don't just get to the third stage and the fourth stage. This second stage is where you now find the right mentor that will teach you what you really need to know in the financial market to be consistently profitable. Then, to go to the third stage and the fourth stage, there is a wormhole. Okay, how would I put a wormhole? What example best explains a wormhole? Okay, yes, an elevator. There's an elevator that you need to take to the third and the fourth stage. Now, that elevator is called the trading void. Okay, I named it the trading void because this is where you now need to accept the fact that yes, I don't know it. I have to forget all the old things I know to learn a new thing. This stage or this void is very, 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 very um important, and it is where you can lose it all by giving up on trading, or where you can push further and learn the real arts of trading. Now, after you escape the void, you go to stage three. Okay, stage three is conscious competence. Okay, you now know that you know it after your mentor has taught you. You've practiced and practiced and practiced and practiced. You've been able to apply these things in real time or real trading situations. Cautious competence. You now believe that you know it. Okay, you now believe that you know it, you now believe you can do it, you now believe you can make money consistently from the financial markets. Are we all following? Yes or no? Are we all following? Yes or no? I'd love to get a lot of response in the chat box. If I'm making sense, drop something in the chat box. Brilliant. Now, this is where you now get to the last stage. The last stage is what I call the aspect of you discovering your edge. Okay, your edge is now when you yourself, you don't even believe you know it. That's like the most craziest stage when it comes to trading, because you are making profits consistently. You don't even know how you're doing it, but you're making profits consistently. That's what they call uncautious competence. You've attained, how people call it, god level when trading. Okay, you've attained god level when trading. Like, you can just hop into the market, say today I'll make $50 out of the market, and you make $50 and beyond when trading the financial markets. So those are the trader stage, and I want you to identify the current stage you're in. When you identify the current stage you're in, it will help you project further in this space. Okay, it will help you project further. It will help you know what exactly you're doing in this space. I hope you did learn a thing or two from this. And yes, let's go back to our Q and A. So let's keep the question coming. Let's keep the question coming. Okay, Halimat asked a question. Okay, so I will call Halimat and Debbie on to talk with me, because they have the same question. So wait, let me just bring you guys on a minute, please. If you're in an area where there is noise, please let me know so I wouldn't send you an invite. And if you're aware you can speak to me properly, let's do all to accept the invite. Okay. So I invited Debbie and Halimat on stage. Please do join me, and your questions, just state your questions so everybody can hear you clearly. Okay, so we are all waiting on you guys to join us. Okay, yeah, waiting for you guys to join me on the call. Okay, still waiting on you guys to join me on the call. Okay. Still on here waiting for you guys to join me on the call. Um, okay, you guys are still getting ready. Okay, let me just hop onto the chat. Let's see, we have something in the chat box. Brilliant. I so much love that. I so much love that. Okay, let's take it slowly. Okay, I'm attending to Debbie and Halimat now. Okay, it's going to get to, then after that, Silas, Precious, and Karachi again. Okay, can someone please kill my phone for me? Okay. Okay, it seems the two of them are delaying a lot, and I won't be. Okay, she said to send the invite again. Okay, Debbie, I'm sending you the invite again. Okay, I just sent you the invite again, please. Okay, I think somebody's joining already. Alimat, would you mind? Would you like me sending you the invite also again? If yes, let me know. I will just cancel the invite and send you the invite again. Because it was very easy. I had two people join yesterday. It was very easy. I had two people join yesterday. Okay, so if we are still finding it difficult to join the call, please let me know. Trying to. Okay, great. Good morning, Debbie.
Good morning.
Hope you're doing great.
I'm all right.
Yeah, okay. Alima, I'm canceling the invite I sent you, and I'm sending another one. Let's see if you join me the second one. Okay, so let me share my screen, my MT4. We're using MT4 for that. Okay, we're using MT4 for that, and I will explain in detail what I mean by what I mean when it comes to Fibonacci's. Okay, so can you see my screen clearly? Can you see my screen clearly?
Yes.
Okay, great. Now, let's check GBP JPY. Okay, or not. Oh, I can't really see anything there. So let's check NZUSD. Let me just add a template on it, and we would be good to go. Now, I want you to answer most of the questions. Okay, you answer most of the questions.
Okay.
Now, your question. Do you mind stating your question again?
Okay, my question is I want to understand how to use it in a chart, like
Okay.
how to read it, how to place
Okay.
it, and how
How
to
to
even know what to read.
okay? How to know what to read? Okay, great.
Yes.
Now, there are two types of trends in the financial market. Can you tell me what they are?
The uptrend and the downtrend.
Brilliant. Brilliant. Now we have the uptrend and we have the downtrend, right?
Yes.
So we focused on this move first. Let's focus on this move first. Now, in an uptrend and a downtrend, okay, in an uptrend, what do we have in an uptrend?
We have lower highs and higher highs.
Okay, higher lows and higher
Higher
high.
lows and higher highs.
And in a downtrend, we have what? Lower highs, lower lows, right?
Lower highs and lower lows.
Brilliant. Now that we understand that's what we have, okay, lower highs or lower lows, or higher highs or higher lows. They are also called swing points. Okay,
Okay.
swing points. Now, what we do when we want to draw a Fibonacci in an uptrend is we put the Fibonacci on a lower swing point and drag it to the most relatively close higher swing point. Okay, this is the lower swing
Okay.
point. Then we drag it to the most relatively close higher swing point. Okay, then we anticipate to buy. Okay, remember it's an uptrend, swing low to swing high, right?
Yes.
Then we anticipate to buy whenever price trades back into the 38.2, the 50%, or the 61.8 fib level.
Oh, okay.
Do you understand? Now, you don't
Yes.
just buy blindly, or yeah, you don't just buy blindly when price comes into the 38.2, the 50%, and the 61.8 fib level. Now, you might have seen on my chart sometimes I have the 78.6, the 86.2, and the 98.1 fib level. I use those fib level because of I just like using them. Okay, there are reasons I use them, but I just like using them for a certain reason. There's no need for you to be able to use it also. Okay, just know that the major one is 38.2, 50%, and 61.8. Okay,
Okay.
now in an uptrend, we always know that when price goes up, it becomes expensive, right?
Yes.
And when price comes down in an uptrend, it becomes cheap for you to buy more. Abi now,
Yes.
brilliant. Now, when it goes up, we call it premium. Okay, premium price. Okay, when it comes down,
Okay.
we call it discount. Okay, so in an uptrend, we want to buy price at every what discounted price. Okay,
Okay.
I believe what's it called? I believe Alimat is following. Okay, I believe Alimat because it's the same thing I'm explaining to you guys. Okay, now you want to buy price at every discounted price. Okay, price this is price, but you want to buy at discount. So now look at it. Price went up and came back to the 50% fib level, then it reversed. You will be buying at the 50% fib level, right?
Yes.
But you don't just buy at the 50% fib level. There must be a reason you want to buy at the 50% fib level. Now, if I were looking at this chart right here, what I would have done is simple. I would have said this was a what? Breaking market structure. Do you agree with me?
Yes, it was.
You agree that this is the breaking market structure, right? Or this was
Yes.
the breaking market structure. Then market structure broke, impulse and what? Correction. So this was an impulse, right?
Yes.
Then price corrected, right?
Corrected it. Yes.
Now price corrected back to where? Look left to get what? Right. I mean, look left right here. Look at where I'm looking at.
Okay.
This was resistance, right? This right here
Yes.
acted as resistance. Let me show you.
Yes. Yes.
This right here acted as resistance. I'm coming. Let me put it that way. Did you see it? Did you see that
Yes.
resistance?
Yes.
Right? Now this also acted as
Yes.
what? Resistance right here.
Resistance. Yes.
Now it acted as what? Support right here, down below. Let me just use the arrows actually. This acted as support right here. Did you see it? Can you
Yes.
see that? Support. It acted as what? Resistance right here. Right?
Okay. Yes.
Now, look at what happened after it acted as resistance. Price traded with full force or full momentum to the upside, right?
Mm-hmm.
Now, look at the same thing happened here. It never happened, right?
No, it did
Price
not.
never traded away with full momentum. Just traded and there was still red candles in between. But look at how this, look at, compare this piece of price action to this piece of price action. It's different, right?
Mm-hmm.
Now, what this would have given you was a heads up that whenever price comes back, or if price tends to come back down below the market structure break, we are only coming back to retest the previous level for more chances to buy. So that is how you combine Fibonacci with price action on the charts. Okay, break a market
Okay.
structure, resistance, we anticipate it to turn what support. You could have gotten a sniper entry there, and if you enter that trade at that area right here and you took profits at this high, that would have been, let's say, yeah, that would have been a sweet 69 pip. I don't know, possibly that's 10% of your trading account or something, but 69 pip or 70 pips to be precise. Cool money, like cool money. And if you said, okay, you were not targeting this clean highs, you were targeting this clean highs right here, you would have made how much? You would have made how much right here? Because this is where it pushed. You'd have made 200 pips in total, 200 pips, 200 clean pips without stressing, okay? Without stress. And you would have been risking just how many pips for stop loss? Imagine risking 14 pips or 10 pips, 10 pips for a stop loss and making 200 pips. That's like a 1 to 20 risk to reward ratio. You see how easy it gets, right?
Yeah.
When you just know this concept, I always tell you, it's not all about coming to my classes. It's all about being able to go back in time and see these things happen. I can go back in time right now on this chart and show you how many times this same logic happened. Look right here, okay? Now, this is for an uptrend, right?
Yes.
Now, let's do the opposite right here. This was impulse, right? This was an impulse in
It
price.
broke.
This is correction. Exactly. It broke market structure right here. So this generally tells me I'm in a what? Bearish market structure, right?
Yes.
Now, this was impulse correction, then impulse. Fine, you might have missed out on all of this move, but you wouldn't miss out on this because you're expecting another impulse. Now, the only place you would have made a mistake, or the only reason you might have not entered this trade is why. Because of the only reason you might have not entered this trade is why. Let me show you why you might have not entered this trade. It's because of price never came back to premium that much. Okay, price never came back that much to premium, but it still came back to the 38.2. And if you were somebody that is not really conservative, you would have entered a sell, yeah, and made a lot of money. But if I were the one, I wouldn't enter there. I would just come right here. This is where my Fibonacci was big. Remember, in an uptrend, we did swing high to swing low, right?
Yes.
Sorry, we did swing low to swing high. Sorry.
Swing low to swing high.
Exactly. In this downtrend, we are doing what? Swing high to what?
Swing high to swing low.
Brilliant. That's how you use fibs. Now let's make this add up properly. Okay, let's make it add up properly. Now look at this. The same thing we did here. Market structure is bearish, right?
It's in a
Market structure is
downtrend.
bearish,
Yes.
right? It's a bear trend,
Yes.
and we have clean lows right here. Okay, this is where the swing low is, right here, and that's a clean low. That's double bottom right there, right? We expect price to purge it, and what do we have? We have resistance right here. Okay, we have price right here. We have this piece of price action right here. Can you see it?
Yes.
Resistance. It wasn't really creating anything here. Then we anticipate it to act as what? Resistance, because this was just a choppy market structure. We couldn't determine anything from that. And look at this right here. It came back into the what? 61.8. Now let me prove a point to you real quick. Let me add right here and look at where price reversed from. I said 78 point what? 6. Remember I said I used the 78.6 fib level sometimes, right?
Yes.
And look at where price reversed from 78.6 right there. So if you were somebody that was using 61.8, you would have gotten into that trade here. Fine.
And
Fine. You
hit
would
your
have,
stop loss
you would
maybe.
have no, it will not eat your stop loss. Why would it not eat your stop loss? Because this is where you're now. Remember, you have to be very, very logical with where you place your stop losses, right? Look, it would have never hit your stop loss because you would have placed your stop loss at this what previous high, this old high right here, right? This old eye right here, right? That's where you'd have
Okay.
placed the stop loss, or you would have placed it above this one. To be very, very candid, you would have placed it
Yeah.
above this one, but this was significant. But if it were me, I would have placed mine here, even if I got into this trade here. And look at what happened. Price never what
Broke there.
exactly. So using Fibonacci actually gives you an edge in the market. But let's continue to wow, sorry. Let's continue to what I was saying. Now, how would you have entered this trade, or how would I have entered this trade? Simple. My entry would have been here. Then my stop loss would have been like 10 pips or something. Then my take profit would have been here. Now, see, very simple. I entered this trade here because this is where my entry would have triggered. I know for sure. Because I'll use a sell limit order and I would have made what? 160 something pip. Okay, 160 pip. And I would have used a stop loss of 30 pips. Sweet risk to reward ratio. Like, that's how you use Fibonacci when trading. Do you understand?
Yes.
You do understand clearly now. No questions again.
Yes, I do. No,
Brilliant.
I understand. Thank you very much.
You're welcome. So, I would be taking you off the call right now. So, anybody else with another question? Like, I'm so much in it for it today. Okay, so much in it for it today. Oh, I should send you an invite to join me on stage. No worries at all. Okay, so okay, Ikena said using Fibonacci create a lot of second guessing. Why lots of traders aren't using show of trades? You can't take more than 50%. Now, see, Ikena, let me be precise with you, okay? Fibonacci doesn't give a lot of second guess when you know what exactly you're doing in the market. So it's your perspective, I believe, and it's my perspective. I know what I'm doing in the market. She knows what she's doing in the market. A lot of people know what they are doing in the market. If they use Fibonacci the right way, okay, in quotes, the right way, it won't give a lot of second guess. It will just give a key point of where you are supposed to look for price to reverse from. So now imagine when I trade, I don't think of Fibonacci as Fibonacci. Okay, I think of it as premium and discount. Okay, I want to sell at premium. I want to buy at discount. If Fibonacci crosses the 50% fib level and continues trading higher in a downtrend, I know that once it has crossed 50% fib level, I'm looking for selling opportunities in that region. I'm looking for order blocks. I'm looking for RTUs. I'm looking for mitigations. Those type of things. There's a lot of things to learn. Okay, there's a lot of things to learn, and that's just a tip of the iceberg. So I'm going to the question section right now. I'm going to the questions to go and pick up questions, and invite. If your questions are relatively the same, I'll be calling you guys on stage together. Okay. So I'm not trying to prove a point to you, Iken. I'm just saying my own perspective. Okay. So Silas said, "Can I explain verified support, unverified support and resistance, two tested and untested support? How can one set up indicators on MT4 like Bollinger Band?" Then Karachi says, "Why does EUR and DXY trade inversely?" Okay, I'll call Karachi and Silas on the call with me. I'll call you guys on together. So Silas, I'm calling you on right now. I sent you an invite. Please join me. And Karachi, I can't. Okay, I can't really find you. Okay, found your name already. I'm inviting the two of you on stage to join me. Please do join me and make sure you're not in a noisy area. Okay. Oh, very, very sorry, Alhimat. Very, very sorry about that. You know what you would do for me? What you would do for me is you would have to watch the replay of the class because I said a lot of things. I said a lot of things, and I'm very, very sorry you had to miss out on that. Okay. So Karachi and Silas, please join me on the call. Silas, I'd love you to join me on the call. Okay. It's still showing pending invitation. Now, Karachi, you said, why does DXY and the EUR USD, GBP USD, AUD USD, NZD USD, why do they trade inversely? Okay, now I'll share my screen. I always try to make it. It's not theoretical. It's something you as a person can see real time. So I will show you on my charts. Now I'll be using TradingView in this instance. Okay, I'll be using TradingView in this instance, and you can recall yesterday on the Telegram group I called EUR USD buy. Sorry, I called DXY buy to be precise. Around, let me confirm that. Okay, let me confirm that. Let me confirm the time I called DXY buy. Okay, let me confirm the time I called DXY buy yesterday. I called DXY buy. Let me confirm. Okay, I called DXY buy, and someone shared the message 3 times. Okay, I called DXY buy at 8:35 in the morning yesterday. Once I immediately I got to the office, I called DXY buys yesterday. Now, the reason is because of I was expecting a strong dollar. Why was I expecting a strong dollar? Simple. Dollar is oversold. Okay, we've been selling dollar too much, and what another reason was because of this were clean lows right here, clean lows. That's liquidity right there. Where I told you, whenever money comes, they grab it and they reverse. That was what happened. That was what just happened. They grabbed it and they went long immediately. Now, how did I know DXY was going to buy? That was how I knew DXY was going to buy. And why did DXY trade differently? I wanted to buy DXY again this morning, but it never got to my order. You would see right here, it never hit my order. It never did. And I was so like angry at myself. Why didn't I add a few more people? I could have reached like 10 pips to catch, because this will be the initial target again, or this will be the initial target. 10 pips to catch 276 pips. Sorry, 100 pips to catch 270, but I could have streamlined it down on the 5 minutes or 1 minute time frame. But where I'm driving at is the fact that DXY is dollar. Okay, once you understand what is happening to dollar itself, you'll be able to trade EUR USD. Okay, I called EUR USD short also yesterday. I called EUR USD sell. Like, I never knew it would sell this much. I took profits right here at this clean low right here. It was a clean low on M5 or M3 or M1. I can't really remember, but I took profits right here just beneath that area. I never knew it would sell this much. If I knew, I would have still stayed in the trade. I tried buying this also, but I got taken out to break even. My order activated here, but I went out at this high right here, just scalping. So now, why do I understand that DXY trades inversely with EUR USD? Now look at this DXY chart. Just look at this. Look at EUR USD. Is there any difference? Is there any difference? It's just that they are word and opposite, right?
Yeah.
Now it's simple. The only thing
exactly word and opposite actually.
Exactly word and opposite. Once you can deduce what happens to DXY or what is likely to happen to DXY, you'll be able to deduce what will happen to, what's it called? EUR
USD or the rest of them.
Did I send in a monthly time frame analysis on DXY? 1 month time frame analysis on DXY that I once did. I think I sent DXY and ERGBP. I said it should guide you for the next coming months.
Yeah.
That don't expect it to play out immediately, but it will take time. Now, that was it. Once you understand higher time frame premises of price, you will be able to trade what's it called? Financial instruments easily. Now look at EUR GBP. Now, why am I buying EUR GBP? Okay, I'm looking to go long on, or I've went long on EUR GBP actually. I got my first entry here. Price came back into my entry trigger. I entered another one again. Now, why am I buying EUR GBP? Simple. From the monthly time frame, that was why I did. Like, I expect EUR GBP to fall, but before the fall, I expect EUR GBP to get to 0.88658. This already gives me a structure of how to or where EUR GBP will be going to on the lower time frame. So the lower time frame is it has to go up before it comes down. That's how I just do it. Like, it's very simple. Now, understanding what happens to EUR GBP gives me an idea of what will happen on EUR card. EUR JPY, EUR blah blah blah, and it also gives me an idea of what will happen on GBP. GBP GBP I think I called EUR card trade a few days ago, and I think it hit stop loss because
Yeah.
trade was not really ready. I just called it blindly because I felt it would actually pan out. Don't mind my chart. Oh, it's still at entry. It's still even at entry. It didn't hit stop loss. It's still at entry. But I feel it has to get to this
But
high.
it didn't go that high. I was in the trade that day too.
Sorry, what did you say?
I said I was also in the trade that day, so it didn't go that. We are speculating to get this high
Yeah,
before dropping. It
yeah,
didn't get that high. I was taken out.
yeah. So the reason I actually got taken out, like I told you that day, was because of I was trailing my stop. Remember, I told you I moved my stop to BE immediately
Yeah.
to break even. So that was why I didn't even really take a loss on it. I only got stopped out break even, like I lost $0 to it. But that's just it. But I still expect ER card to trade higher though. I expect it to it's still at my entry. I could decide to buy again, but I would prefer it straight back to this area of interest. This one right here, this one down below there. Like this
Okay.
one down below here. Come, let me change the color. I expect it trades to this area down below here. Like possibly my new entry would need to be this area right here. Okay, just this area right here. So it has to trade down below there before I can say, okay, yeah, I'll not get my entry right there. But that's just it. Like once you understand that crosses will give you an idea of what is going to happen to those pairs or those financial instruments separately, you will start implementing this logic when you trade. Okay, it's not magic. It's something that you see on real time. Okay, you see it real time. Now remember I said EUR GBP will buy on the monthly time frame. That is why I forecasted this EUR card, because EUR will gain strength for a month. Card has to be weak for a month, and it also aligns with seasonality data. So like there's a lot to learn when it comes to trading. There's a lot to learn.
Ooh, analysis.
Okay, so I will just
Okay,
be
wait, 1 minute. 1 minute,
no problem at
please.
all. Go ahead.
Okay, my head has scattered with that statement again.
Okay,
But no
seasonality
problem,
data
I'll
is
get
just
there.
how price moves every quarter in time when trading. Okay,
Okay,
how price
I'll get there. Let me remain where I am and grow from there first. Now,
okay,
in FIB, I have
okay,
an issue with FIB.
right,
Now, one of
go
my
ahead.
best strategy happens to
Yeah,
be FIB in line with either channel or trend. I notice I
okay,
do well with that. But the problem
brilliant.
I have with FIB is that it doesn't always match with my risk management, probably because of the little capital I'm
when
using.
when a tool doesn't match with your risk management,
Hmm.
you check your risk management, not the tool anymore.
Yeah, that's what I'm saying. I know that definitely this will get to what I analyze. But the problem is, if I'm to play the game as I analyze, my risk will not be higher. That is where I have a problem. For instance, the one you just taught now, where you
Yeah,
said the stop loss should be at the top of the when you
previous
are
high.
giving good. Now, based on the capital I have currently, if I should attempt that kind of a thing,
Yeah,
even though I am very sure that the analysis will actually go well, you
yeah.
see that my risk will go above 10%.
You
So in
risk
that case, what
10%
will
on
I
a trade.
do?
I only risk 1% to 3% on a trade. That's why you see my stop losses are very, very small. 5 pip, 10 pip. The highest I can go is 30 pips. The highest I can go is 30 pips.
Hmm.
And 30 pips means I'll have to reduce my lot size. So it aligns. Okay. So try reducing your stop loss if you your lot size if it doesn't align.
I'm
That's
going with
another
the
thing.
lowest. I'm going with the lowest. That's 50.
Wow.
I'm
And
trading with the
you're
cloud.
still risking 10% per trade.
That means that's what I wanted to ask. Does it mean that you need to keep your capital? I'm noticing that capital is very important in trading.
Very, very important. Very, very important.
You need to raise the capital to a reasonable
You
level
see, let
before
me
you
let me
can
tell you
start.
something. Let me tell you something that people don't know. Because of I say the minimum to do something is a certain amount. You don't stick with the minimum. Okay. Good capital gives you better edge when trading. If you have good capital, you won't be scared of pullbacks and drawdowns. You won't be scared of
Okay.
you losing money on a single trade because you have reserve that would help you make that money back. I hope you understand. So that's just the logic. Okay, that's just the logic. So Karachi, I hope I've answered all your questions.
One last one before we go. This is the last
Oh,
question I'll
okay,
ask
no
for
problem.
today.
No problem.
Yeah. Now, in FIB, I know that when you want to trade FIB, you go with swing highs and swing low. Now, something confuses me.
Yeah.
Sometimes I try to trade FIB with
Swing
a
high
reversal.
and swing low. Swing high
Yes.
and swing low is
Yes.
for a downtrend. Swing low to swing high is for an uptrend.
Yeah, I know that. I know
Now,
that.
okay, why do you want to trade a reversal? Why do you want to catch a top and a bottom when you can just trade the trend? You see, the trend is your friend until it reverses, okay? Stop trying to trade a reversal. Try to fall in alignment with the trend. When a reversal happens, you won't get uncut.
Okay.
I didn't say Ikena, I didn't say you have to trade the monthly time frame. I only said that the monthly time frame, the weekly time frame, and the daily time frame is just a premise, okay? Just a premise to understand what will happen on the lower time frame. When you understand direction on higher time frame, it is easy for you to know what the lower time frame will do. So I'm not saying you have to trade, you don't have to trade the monthly time frame. Only the big banks, okay? The big banks, the top dogs trade the monthly and weekly time frame. Even the big banks, top dog, they still trade the daily time frame. They never go beyond that or lower than that. But for us as retail traders, daily, 1 hour, 4 hour, and lower is better for us because we want to make money quick. The banks don't care if they are in a drawdown for months, and one single move would make them a lot of money. Okay, so what I'm just the way I trade, like I said, it's all about perspective. The way I trade or the way I approach price is to understand higher. I want to trade in alignment with the big banks. I don't want to trade like everybody. Okay, I want to trade in alignment to the big bank. So I need to understand where the big banks are going. Then my trades will be in alignment with the big banks, and that's what I advise everybody to do. My thoughts, though, if you don't like that idea, you trade based on how you like your own trading idea, and that's it.
Okay.
It's all love and light. Okay. So okay, Karachi, let me get someone else on the call. Let me get someone else.
Thank you, sir.
You're welcome. Precious, sincere apologies for keeping you waiting. So Silas said I should kindly use the chat to explain this term for you: verified and unverified support. Let's quickly do that. So Silas, pay close attention, okay? Pay very close attention. Pay very close attention. Okay. Now, verified support, unverified resistance, or verified support, verified resistance, and the likes. Okay. So verified support and unverified support is just verified support. Price has come there and tested it multiple times. Unverified, price has never returned to that area. That's just it. Now, the same is for resistance. Just take the opposite. I don't want to waste much time on that. Now, let me show you an example on the chart. Look at this right here. This is verified support. Sorry, this is verified resistance, okay? Verified resistance. This is verified resistance, okay? It bounced once, bounced twice, bounced 3 times. This is telling you that this area is strong, okay? Now, this is verified support. Let me just invert kill my chart, and bounced once, went up, bounced up, went once, and you see, that's just it. Now, unverified is we can now take this type. I'm trying to look for something that works. Okay, yeah, let's use this. Unverified resistance is this. Price hasn't returned there. Okay, this is unverified. Price hasn't returned there. This is unverified resistance, and this is unverified support. Can you see? Price hasn't gotten back there, but this one right here is verified support because price has bounced multiple times to the upside. So that's just the logic to it, okay? That's just the logic to it. Now, the second question is tested and now verified, unverified. Okay, verified and tested are the same thing, okay? It's just somebody's trying to sell you something. That's why they changed the name. And do you know that support and resistance can also be called polarity in markets? Support and resistance can also be called zones in the market. Support and resistance can also be called order blocks in the market. Support and resistance can also be called demand and supply in the market. Did you know that? It's just people trying to change name of things and tushing it a bit and try to sell it to you. Okay, so verified, tested are the same thing. Unverified, untested are the same thing. Okay, how can one set up indicators on MT4 like moving average, Bollinger Band, and okay? So let me just share my MT4 screen real quick. I hope you're getting the idea, Silas. Okay, how do you add indicators to your MT4 on mobile, or sorry, on PC? Now, how you add indicators to MT4 on PC is simple. There's this button, there's this icon right here, E+. Click on it, you find all the indicators, trend indicators, moving averages, parabolic SAR, Bollinger Bands, you find it there. Oscillators, MACD, stochastic, RSI, awesome, and all, you find it under every single thing right here. And custom indicators, if you have custom indicators that you use, like I have custom indicators I use sometimes, you find it there also. That's how you add indicators to your chart on MT4. Okay, so let me share my screen, whack, and we proceed. So Precious, sorry for keeping you waiting. Sorry for keeping your question hanging actually. So if you're still on this call, I would gladly love to add you to the call so you can ask your question and ask more questions. Okay, and if you've got question, if you're on this call and you've got question, you are shy, you don't want me to call you on the call, please just drop the question in the question section and I will respond to it. I would gladly respond to it. And Precious, please, if you're in a noisy environment, kindly step away from that environment, okay, before you accept the invite. I'm waiting for you on the call. Kelechi, I would love to bring you on the call. Don't worry. The question still has to wait for a while. I think has she joined me here? Okay, Precious, I'm waiting on here for you. Can you hear me? Precious, can you hear me? Hello, Precious. Hello.
Can you hear me?
Yeah, I can hear you. How are you doing this morning?
Can't hear shit though.
Can you hear me now? Do you mind using your AirPod or? I really don't know how they join the chat. Also, like I would send you an invite. Also, you've got nothing to worry about. Okay, you've got nothing to worry about. Oh, I think your mic is muted. Okay, asked to unmute, and I think she left already. Wow. Okay, so I will be bringing Chooks and Kelechi on the call together at the same time, like two bright minds. I would send you an invite. Just still take a chill pill, okay? I think she left the call. I don't want this webinar to exceed an hour. If you've got questions and you don't want me to bring you on the call, kindly send in your questions in the question section. I would respond to it immediately. And if I haven't responded to your question, just drop a message. I would respond to it. Okay, so I'm bringing Kelechi and Chooks on the call together. Okay, so great. You can join me. Please move away if you're in a noisy environment. Okay. Yeah, it's amazing seeing you on here, Kelechi. Ask to unmute. Wow. A minute, let me just unmute your mic. Kelechi, could you help Chooks figure out? Okay, I would send the invite again, Precious. Let's just get you guys on the call already, and I think it pops up on your screen or something. Chooks, try to figure it out. Kelechi, how are you doing?
Yeah, I'm doing fine.
Just a minute, please. Let's get. I would like to bring Ike now also on the call. Like, I love the fact is on the call and is. Okay, Chooks, how are you doing? Do you mind turning off your camera for security purposes? I disabled your
Eh?
camera. Okay, great. No, I was talking to
Oh,
Yeah,
Chooks.
okay.
you can hear me,
Yeah,
right?
yeah, yeah, yeah. I already turned it off. You've got nothing to worry about.
Okay, cool.
So, how are you doing?
Yeah, fine, fine.
Great.
I,
So,
I, I missed the chat.
okay, let's start with Kelechi. Kelechi, your question, please.
Yeah, yeah. My question is, I I think I've gotten the fundamentals of trading,
Yeah.
which
From your
yeah,
results, I can see that from your
yeah,
results,
yeah,
communication. You've been with me for the past 4 months or 5 months, I guess, right?
yes, yes,
And I've seen you
and
scale up, grow from regular retail metrics to smart money concepts, and you are
yes,
improving every single time. So,
yes.
what really is the question about?
Yeah, the question is like I want to advance. I want to get more knowledge. I want to
Yeah,
improve. Like
I understand. I understand. I understand. I understand.
yeah. So
We've all been there
I
before.
think
Okay.
yeah,
Now you see, there's no better knowledge or bigger knowledge than discovering yourself on the charts. Okay, there's no knowledge again. You've learned smart money concepts. You've learned fundamentals of how price is built upon, which is support and resistance. You've learned price imbalance. You've learned how price is
yeah,
delivered, IPD, interbank
yeah,
price delivery, algorithm. You've learned all of that. There's nothing else to
yeah,
learn. You know what else is to
yeah.
learn?
What else?
Self mastery on the charts.
On
You
the
need to
chart.
understand yourself on the charts. You need to determine, do I want to swing now, or do I want to day trade? Do I want to scout? You can apply all of these concepts every single part of the market, and that's what's left for you. There's nothing to advance. Or you want to learn GAN method? There's a method called GAN.
Yeah,
I
yeah. I've seen. I know.
the financial market is very, very funny. But
Yes.
there's no need to add. Adding of knowledge just um disrupt the whole thing again.
The
You
whole
start
thing.
from the scratch. You've unlearned and you've relent.
Yeah.
You'd have to struggle again to learn. And
To
that's the
learn.
thing. Leave all of that. Smart money is the key. You've learned smart money, and that's all you need.
Yeah. And I think I want to
Unless
really.
you're looking to learn Wyckoff. The Wyckoff is
Oh,
just basically supply and demand.
demand.
Wyckoff is basically
Yeah.
supply and demand. If you do study it properly, it's basically, so that's why I left it. I rather go and study Chris Laurie's course or Larry Williams' course than study what's it called? Wyckoff.
Wyckoff.
I believe those guys know something that I'm still yet to discover. But Wyckoff just EFP, accumulation, manipulation, distribution. I've seen this thing happen. It happens every single day. Asian session, price trades higher, we sell. Asian session, price trade lower, we buy. That's basically what he's saying, and he's trying to switch it up. Spring, well, I'm not throwing shots actually. But what I'm trying to let you know is that you've learned all the things you need to know. You have hit consistency. You've hit rock bottom before you hit consistency, and that's all you need in this space. Okay, so don't try to force yourself, or don't try to trigger another aspect of yourself wanting to learn. All you need to just do is spend time with the charts. There are little mistakes you make. I know there are little. I see it on the chart, but I'm not in that position to point it to you anymore. You are able to understand it properly now. Okay, so the best, buddy, the best.
Yeah. Thank you. Yeah.
You're welcome.
I,
So I'll
I
be
really
taking
want
notes.
to. I really.
No,
Yeah.
go ahead.
Yeah. I really want to thank you because I think people tend to underestimate the advantage of having a mentor in trading because
They think the social media is built these days to make you think that you don't need these people to put you on the right track. Okay?
yes,
You need somebody to put you on the right track,
because
and
I've really I have this
you don't need to pay somebody to put you on the right track.
put on the right track.
Most people just need you to be committed, like the way you're committed. You are always in my inbox asking for materials and this and that. And I saw, okay, there's commitment here. This is what you need to study. I told you this is what you need to study. You came back, you told me these things are very, very boring. But the key thing is boring is the key. I hope you understand.
Yeah.
And that's it. When Michael speaks, it's very boring, right? Very, very boring. I said when Michael Hudson speaks, very boring.
Yeah, yes.
You sleep multiple times, but that is the key. That's the key. So I'm glad you figured it out, and I'm very
That's it.
thankful for the appreciation.
Yes, because in this part I've learned more in this past 4 months than I did 2 years or 3 years ago. Like learning about forex and everything. It has
Most people
been really
underestimate.
very
Most people
impactful.
underestimate the power of the education EGM offers you. Like you don't get this type of education anywhere else.
Yes, true,
You
true,
don't
true.
get it.
That is very true.
I'm
That
not.
is very true. That is
Let's
very
just say
true.
I'm bragging, yes, but
That is
to be
very true.
candid, it's not bragging. It's the truth.
For
EGM
free, for
offers the
free,
best for free.
for
Nobody
free.
does it.
It's
Nobody
not
does that.
possible.
Some
It's not
brokers will
possible.
tell you you need to
It's
have
not
a
possible.
$1,000 before you can attend this type of lectures. Well, we don't do that. We want everybody to learn. We want everybody to earn. That's why I tell you, don't sleep on the Telegram group. Please don't sleep on the Telegram group. There's a lot of content shared there daily, from books I read, from trade ideas to every single thing. The classes are free. It's free. The classes are free. Precious. Are you paying for the class? You paid for you? You paid to attend this class. From who? Wow. Because I know the classes are free actually. The only thing we need you to do is just a commitment in your trading account. That's it. So you're not paying. You pay 25K. Hey, how? Because I can't really figure it. I'm just hearing this now. Do you mind sending me a message on WhatsApp right now? Because I need to get down to the root of this. But Kelechi, I hope you do understand what I'm saying, right?
Yes, yes, yes. I understand. Thank you very
Right.
much.
You're
I
welcome. So
appreciate
I
it.
can take you off the call now, right?
Yes, you can.
Brilliant. Oh, okay. She meant 25K. Okay. 25K loss encountered. I can't really. I'm trying to ask Chicks to unmute. Chicks, a minute. Let me just click on ask to unmute. Okay, great. You can unmute yourself now. How you doing, buddy?
I'm fine. When she said 25K, I was like, I didn't see 25K in my account.
Jokes on the house. Jokes on the house.
No,
So
my question would
Go ahead
be
with your question.
I think my question would be more for newbies,
Okay.
as opposed to like myself that has
Yeah.
been in the trading game for a year or two. What tools do they need, like from the get-go, to start? You understand? All right, you're giving them all the training, but now they've got the chart. What should they have like at their arsenal ready to go, apart from the buy and sell button?
Wow, I really love that question. Now, there are tools you need to, or there are things you need to know that will lead you to the tools. You agree with me, right?
Mm.
Now, there are things you need to know, which is first, basic understanding of the market, like basic understanding of the financial market. I'm not talking about support and resistance, supply and demand, trend lines, how price moves. I'm not talking about that actually. Okay. What I am talking about is, what is the financial markets? How does the financial market works? What else? Opportunities the financial markets give me. What else? I'm trying to remember all of these things. But I know you catch my drift, right? What our currency does. How does trading work? You look for a pair, you like it, you analyze it, you figure it out. Having the right mindset, not the mindset that Forex is not a get rich quick scheme, but I can assure you, you can get quick rich trading Forex. You get the point there, right?
Yeah.
Now, after you have basic knowledge of what the financial market is, then we can now talk about things you need to know. And you would agree with me that these days, the media as it is what makes it difficult for people to learn the right things. There is a ton of information out there, right?
Yeah.
A ton of information that are useful and that are not useful. And the funny thing is, the masses, those that troop into the financial space, okay, those that troop into the financial space end up studying the wrong thing rather than the right thing. If we take our time to go to Google Trends now and type in the keyword $50 to $200,000 forex strategy, you will see that we have more interest rates. That means that will be what people search for more than how to trade forex the right way. Do you agree? So
Yeah.
people want the shortcut, and they need to understand this concept is not about shortcuts. It's about the right thing. The right thing. Now, coming back to the tools, you just need to understand basic support and resistance, how to implement basic support and resistance, how price moves, is price trending or choppy or consolidating, that kind of thing. And when you understand these basic things, chart patterns, candlestick patterns, those are the basic things you need to understand. When you understand these basic things, the only thing left for you is not to demo trade. I never advise before I start working with EGM, okay, let's play it out. I was working somewhere else, okay, a financial institution, and I never advise clients there to trade with a demo account. Why? A
Yeah,
demo account
I never
will
advise to
ruin your mindset.
because
Okay,
they put in a million, they put in like
exactly.
100,000, the
A
money that
hundred
they don't
thousand
have.
dollar to trade a
They,
demo account.
there's no
You make
stop
money
loss.
easily, no stop loss.
They
It goes
let
the
the trade go
direction
to
every single
minus
time.
20,000, and then it gets
Exactly.
to plus 10,000, and they think that's trading.
Now, no, now the thing is, what the demo account does is it actually ruins your thought about trading. You can hold a $20,000 loss on a demo account, but will you be comfortable holding the same thing on a live account? Never, never, never at all. You won't be. And that's the thing. If you have a demo account with Eagle Global Markets, what I want you to do is write to support right now and tell them, support, please reduce my demo account balance to $200 or $300.
Yeah,
That way, you know that you as a person can afford to deposit $300 into a trading account for a
yeah,
start. That's
yeah,
the only way I advise you to use a demo account. And the other thing is, I don't advise clients to use demo account where I work previously because it will ruin your mindset. It's easy to make money on a demo account, but difficult on a live account.
yeah, yeah.
You will find it difficult to apply the virtual situation to a real life situation. Price is moving. Price is moving.
Yeah,
You won't be able to apply
the
the
best
same
that they
thing.
can do is, like you said, put
Exactly.
$100 on a demo account and ask for leverage of 1 to 400, because obviously then they can trade more as opposed to
Exactly. And you see a
100.
newbie going with a leverage of 1 to 2,000. I heard there's a broker that gives unlimited leverage. I was like, what is
Limited.
wrong with people? And people still settle for now. When clients call in and complain that we are offering just 200% leverage, like, do you know what that 200%
They don't even know what the
must
leverage
mean?
is for. They don't know what it's for.
They really don't know the concept behind leverage. And back to the tools. After you understand candlestick patterns, chart patterns, support and resistance, how price move, which is trending and up or down or consolidating, ranging, the only thing left for you is to understand you need trend line, horizontal lines, and some few other lines, Fibonacci, to apply on the charts and see this thing happen. It is very fine to backtest, but it is also backtesting is just viewing price hindsight. Because when you understand hindsight view of price, you can see foresight of price. So that's it for the newbies. What I have for the newbies, that's it. Don't think the demo account helps you. It helps you in a way, but it ruins your psychology in the end. Okay? Start off with a live account. When you've learned these things, start off with a live account straight up. You will lose money, fine, but it's just the bills you like. It just take it as a business. You don't gain every time on a business, or when you venture into a business, you don't gain every time, and just take it that way. There are times you lose money, and there are times you make money. Okay, so I think this is the best AMA we've ever had. I think this is the best from the conversations.
And how many pairs would you suggest that one starts off with?
Yes,
And
yes,
what
yes.
pairs would you
I when I
that they should
started,
use?
when I
Because
started,
I see a lot of people trading currencies that they most really don't even have any back knowledge. But I know they're using chart and chart pattern, but there's more to just the chart itself. They don't even
but
know
I'm glad
there's
you said.
news coming on that
I'm glad you
pair
said
that they're trading.
there is more to chart itself. I'm glad you said there is more to the chart itself. Please do go ahead.
No, because I mean, for instance, you guys are in Nigeria. I'm here in London. So for me, trading UK pairs like pound, dollar, euro, pound, Swiss, you understand? is because I know I can wake up in the morning and quickly switch on Bloomberg. You know, I have a feel for the sentiment of the pound itself. So against those currencies, it's like, yes, I get that little bit of knowledge insight. But when I see people trade in Australia, New Zealand, I'm like, that's at your bedtime. You understand? Like those pairs are up when you're sleeping because you're not in that zone. And you know, as opposed to what happens during their daytime to when you wake up at night. The chart gives you a picture, but then you know there's more fundamentals in the background that are making those pairs go up or down completely different to how the chart is displaying it and how you have learned as well. So it's like, as you doing the teaching, I would ask, like, for obviously the people, for the people on the chat and the stream now, like, and being in Nigeria, what is their next best friend, and to help them learn and to to focus on those charts, as opposed to you post a lot of setups on different charts, and someone may grab that and see that as, oh, great, yep, it looks great, I'll take it, because obviously they're just thinking of the monetary value, but then it goes against them. We were joking yesterday about the disclaimer issue of, like, your advice is only advice.
Disclaimer issue I gave yesterday.
Yeah, it's not a thing, and I was just joking, like, refund. But on a more serious note, for people that are new into the game, learning, what advice would you give them on pairs to concentrate on? Because I mean, there's 28 pairs, and I think there may be even more pairs out there. But what should they home in on and master those ones? Because, like you were telling Kelechi, he was thinking about like the scalping and so. And then another question as well for newbies would be, what would you advise them to would it be to day trade? Would it be to scalp? Because scalp, you can get taken out in 10 minutes.
Yeah.
On a setup, it could go against you like that. But on a day trade, it could go for like 1 or 2 days. Which one, would they be able to see more on a day trade than on the scalping? Because scalping can, make you think like trading's not for me, because you're going on a scalp and it's like, great, you may get 2, you'd be like, great, then 3 go against you and you're wondering why. So
first off, let's start with the pairs. I'll be candid with you. I see a lot of people trade a lot of pairs, and I'm like, why trade a lot when you can actually settle with less? Okay, when you can settle with less. And that's the thing, less is more when it comes to trading. Less is very more. I only trade DXY, that's the dollar itself, EUR-GBP. Now, I don't really trade EUR-GBP. I only use it to get the directional bias for EUR and GBP, because I trade EUR-USD and GBP-USD. Okay, so what I majorly trade, if you check my what's it called?
Sorry, all my trades, I don't know what's happened to the pound. It's just literally spiked. I've got 6 trades on right now, and I think all 6 are in profit. I don't know what's happened.
Wow.
Sorry, go on. It's just good to see.
So what I'm saying is the fact that you just need to stick with pairs you are comfortable with. Now, pairs you are comfortable with, how? You are comfortable with their price action formation, how their fundamentals are released. Because if you're not comfortable with that, I bet you do a lot of things wrong. Now, how do you find pairs you're comfortable with? There are a major of 28 financial instruments, right?
Yeah.
I won't say take all of them, okay? Just let your mind lead you to that 3 you like. 3, it's okay. Because my own trading history, the most trade you see is EUR-USD, GBP-USD, and the Dow. Then DXY is for the taking. If EUR-USD is not clear, GBP-USD will be clear. Then I will trade the Dow as an addition, 2 trades a day. I don't even trade every day. Then why do I check other financial instruments? Because of clients. Okay, clients would call and say they want a directional bias on something, and you have to deliver, right?
Yeah.
And that's just it. So me, I'm not saying you should trade what I do or act the way I do, but DXY, EUR-USD, GBP-USD, EUR-GBP, and US30. DXY directional bias, EUR-GBP directional bias, ERUSD, GBP USD, US 30 are what I majorly place trades on. But DXY and ERGBP for directional bias.
Okay.
Okay.
Okay. Yeah.
So now to the you asked the second question, I can't really remember. Okay, yeah. Which should they stick to? Day trading, scalping, or swing trading? Now, I wouldn't say to stick to one of them. Why? Because newbies are different. Some have got a 9 to 5 job. Some are at home. Some don't really have time. So it's all based on preference, actually. It's all based on preference. And also, you still need to consider the type of human they are, their characteristics. Do they quickly react? Are they conservative? Are they aggressive naturally in nature? That would help them determine more the type of trader they would need to be. Okay. If they are more conservative, they could day trade and swing trade. They won't
Mm.
drastically make trading decisions. Are they aggressive? Please do go ahead with what's it called? Scalping. Are they conservative? There's conservative also. Like they want to take a step backward instead of taking 2 steps backward. They take a step backward and just go head on. And that's just it, chicks. That's just it. I'm glad we had this conversation.
Okay, that's cool. That's good. Now just wish everyone luck in their trading.
Yeah.
Just yeah. And like you
Good
said,
luck
don't
and good trading.
don't demo trade. Or if you are going to demo trades, just do it on money that you know you can afford, and then you'll see your real results. You know.
That's it. I say multiple times. Demo isn't for you. Don't demo. Just head on straight to life. Least it will bring is losses, and you don't lose in the financial market. You learn. Am I right,
Mm.
Chooks?
Yeah, that's good. Thank you. Thanks for the airplay.
You're
Now
welcome.
looking to what's happened in the on the charts. Everything's just spiked.
Exactly. I still can't really pinpoint what happened on the charts actually, because I was expecting a dollar getting more strong and reaching let me check the levels I was watching. I was watching a weekly sell side imbalance. No, sorry, sell side imbalance, buy side inefficiency around what's that level again? Around 91 region. Yeah, 91 region actually. That's what I was watching. But I just still need to see if price closes bullish this week, then I think
Yeah, there's a lot of news coming out at 1:30.
I wouldn't be placing any trade. Then I will like leave every of my single trade, because if price closes bullish this week, then I think the dollar is in for it. Like feel that sell side imbalance, sell side buy side inefficiency. I think that's more reason, because I was having a discussion with a fellow financial analyst, and we mark out charts the same way. Well, everybody's a pro in their own way. So I was telling him on. Can you see my screen actually? Oh, okay. Let me
um,
share my screen. So I was telling him something about the dollar. Let me share my screen. Um, I was telling him something about the dollar and something I just discovered about price. How
what
price is
what
delivered.
pair are you in now?
I'm not really in any pair. Only waiting for
Oh,
DXY
okay.
to hit my entry, actually. And DXY just hit my entry. I had a pending order placed right here. Like I was risking 100 pips to catch 276. Well, that's a
Oh,
one to
you're going long in the dollar.
yeah, I'm going long on the dollar actually, but let's see what price does. I already made like 10% of my trading account on this, so risking how many percent on this trade actually? Risking 0.11%. So it's nothing to lose initially if it does go haywire. And yeah, it will be my first take profit should be at this high, then second one should be at this old high right here. So I was telling him something about the dollar and how price is delivered. Well, it's just normal stuffs. And I told him once we raid this previous low, because this was a low right here.
Mm.
Once we raided this previously, I was expecting a bullish dollar. Like dollar would actually have to trade higher, because this is a three drive pattern right here. Three drive pattern right here. And I think that's also aligns as a divergence. Let me confirm that RSI. Okay. I think that serves as a divergence. Yeah. a bullish divergence right here. So I saw it as a 3 drive pattern though, but I know 3 drive patterns are mostly divergences. And right here, we rated this clean low right here, low right here. We purged it, and this was a Tuesday. On the 25th was Tuesday, right? Was
Yeah.
Tuesday. I told him LOTW was created on Tuesday. He never believed. Now LOTW means low of the week. Okay, so I told him low of the week was created on Tuesday, and I would be looking to short EURUSD, GBP gold, and I'll go long on DXY. He never agreed, and yeah, we have it. I'm looking for this was Tuesday right here. Tuesday right here in I think early of London session. Let's see, early London session right here. Yeah, right here, early London session. We rated it. We rated Asian lows that way. Then immediately we went higher. Then we got re-entry during New York Q zone right here. Like what I wanted to point out was is the fact that once you understand how price is delivered, okay, once you understand how price is delivered, there's nothing else that will beat you on the charts. Okay, now look at this. Asian lows rated. What happened? We had price trade higher. Asian lows rated a bit after Asian lows. What happened? Price trade higher. Asian lows rated right here. Like we had to go down, created this clean highs. I still see higher prices on dollar today. Like once you understand, see Asian highs rated with a week. This was a news though. A news triggered this. This
Hold on,
was
you're seeing what are you saying today in dollar?
a long on dollar. Price still has to trade high. This is just the early hours of New York Q zone. Like still early hours of New York Q zone. So let's see if I can. Well, I'd like to protect myself further. 0.7% is something. I would like to reduce my There is no way I can reduce my stop loss. There is no way I can reduce it.
Sorry, where's your stop loss?
Right here at 89 region. Right here below.
Okay,
right here.
so hold on. It's coming to play now, right? So it's coming towards your stop loss.
Yeah, it's just around my entry though. If it does move higher, okay. If it does move higher, it moves this
into break even.
5 minutes high. I'm going to break even immediately. I'm not willing to risk anything at all on the 5 minutes.
All right.
Like once it trades, let's just see how price delivers today. Okay. So any question? Wow, we've got questions. Okay, Chooks, thanks for having me on the webinar. Thanks a ton. I'm glad you were able to like figure out how to join me on the webinar. Because last time I think you didn't figure it out. That was why.
No, hold on. Did you do it on Tuesday?
Did I?
Did you do? Did you put me on Tuesday? Did you try to get me live?
It was Tuesday. Yeah, that I had.
No, do you know what? I'm working from home, so I think I had a Teams talk, so I had to put you on mute. That's why. And obviously, I'm on a live camera with my work colleagues. So as much as I trade every day, I've actually got my work thing on the side. So I've got like six screens all in one on my desk. Yeah. So that's why. It's not that I didn't know what
I only use 3 screens though, like one DXY, EURUSD, GBP USD. I only use 3 screens.
Two is for work and the rest is for FX.
Wow, crazy stuff.
Yeah.
I'm just glad we could relate on this properly. Like
no, very
relating on this properly.
True.
It's actually a pleasure having you on here.
And now you're doing good work, but you're very dedicated to the job.
Thank you very, very much. I really appreciate. So see you on the next. I'll be having a webinar on Saturday.
On
not
Saturday?
This Saturday.
All right, send out the what do you
I
call
would
it?
I would let you know for sure. I would let you know for sure. So yeah, I'm still taking questions. Let's go through the chat and see what we have. We're already turning this into a trading session. Okay, okay, Debbie said you have to keep pushing till you get it. It's easy to get 2 support and 2 resistance targets and drag them down. Wow, a lot of conversations. Okay, let me go through the questions. Pressure said, how does one know the buyers or sellers are in control of the market at any point using candlesticks? Precious, this is quite easy to see on the charts. Let me send you the invite again. Let's see if you are able to join me on the call. I just sent you an invite. Please check. I'll be attending to Colin's question and Karachi's question again. Karachi, I just use any zoom level I like. Like to see price better, I use any zoom level. Like if I'm on the lower time frames, I try to see structure properly, so I zoom out a lot. Like I zoom out a lot. But if I'm higher time frames, I'm considered with last year price action. So I just do just a few candles. Like I already have it designated. I mark out quarterly shifts using the horizontal line, so I know what I'm looking for. Precious, it's a pleasure having you on here. Can you hear me? Or you can't
Hello,
still hear
thank
nothing?
you.
Yeah, okay, it's a pleasure having you on here. So you said,
Yeah,
how does
can
one
you hear
know?
me? I can hear
Yeah, I
you.
can hear you. I can hear you. Can you hear me? I think she's having
Yes,
issues with
yes.
that. Can you hear me? Wow.
Yes, the network is actually funny, but yes.
Okay, so how does one know buyers or sellers are in control of the market? It's simple. Remember, wow, precision right there. Okay, sweet precision right there. So remember that I'm coming. Let me just turn these things off. Remember, we said price has a way of moving. We said it's either in an uptrend or a what? A downtrend. Simple as that, right?
Downtrend. Yeah.
When
Yeah.
price is trading higher, what does it mean?
That's an uptrend.
Exactly. But when price is trading higher, what does it mean? It means the buyers are in control, right?
Okay. Yeah.
When price is trading downward, it means the sellers are in control.
Yeah.
Simple as that. It has never been difficult. It's very simple as that. Do you understand?
Okay.
It's never difficult. It's very simple. Very,
Yeah,
very
I
simple.
do.
So that's just
When
it.
price is trading higher,
Yeah. Buyers are in control.
okay.
When price is trading lower, sellers are in control.
Okay.
Okay, it's glad having you on the call. So Alimat, I would love for you to watch the replay. Okay, I would love for you to. I'm sorry your internet connection acted up. Like going through all that stuff again is quite stressful. And Colin said, how can I identify strong buy long and strong short sell on? You just need to put the moving averages on your chart. Okay, you just need to put the moving averages on your chart and follow the direction. Like this, if you put the 200 moving average on this current chart, it will show you it's a selling. It already tells you the direction. You need to figure out the strength of the direction yourself. Okay. So moving averages just help you when it comes to directional bias, but will never tell you the strength of price itself. Karachi, I use any zoom level I like. You see, you don't need to have the exact zoom levels I use to be able to catch up on trades. You don't need to do the exact things. You don't need to mark out liquidities, sell stops, sell hunts, buy side liquidity. You don't need to mark out all those things to do well when trading. You just need to understand trading itself, and that's it. So this brings us to a wrap on this webinar. Okay, can I explain how leverage works? Leverage works in your favor or against you. Simple. When you are given a leverage of 1 to 200, okay, 1 to 200, it's just like saying if you have $10 in your trading account, you've been given 200 multiple of your $10. Okay, that's what leverage is all about. It's just 1:200 means they're giving you a multiple of 200 of that initial balance in your trading account. Now that multiple will not show. It's not going to show there that you have $2,000. It's going to show as $10. What you will just see is margin, and that's where whenever you place a trade or trigger a trade, that's where the a little bit of a capital is set aside. Then money is taken from the margin to run that trade. So that's just leverage in a nutshell, Latifa. We have a webinar on leverage that is specially dedicated to stop losses, leverage, take profit, and all of that. It's on our YouTube channel. I'll drop the link right now to our YouTube channel so you can get in there yourself. Okay. Send the link to our YouTube channel right now. You can get the link. And if you missed anything I said on this webinar, just hop on the YouTube channel, 20 minutes after this webinar, you'll find the replay right there. Okay, so you've got nothing to worry about at all. And this brings us to the end of today's webinar. But before we go, before we go, I would like to just push out a few poll, okay, a full poll before we go. Okay, yeah, okay, I've got three polls to push out. I sent one out, and I sent three out. Okay, so let's please respond to them. I'll be glad if we all respond. That's how you can pay me back for my time. Okay, so that's the link to the replay of the webinar. Also, I'm not dropping the call right now. Okay, I'm not dropping. Let's still respond to those polls. It will do quite well for me to what if you guys respond to that poll. Okay. And I believe we all learned 18 or 2. We spent an hour. We've been spending an hour 40 minutes like this on the call. I'm glad. And I said I wanted to get Ike now on the call. Okay, before we go, let me just get Ike now on the call. Like I want him to ask a question if he has got any. Okay. Let me just. I've invited you on stage, buddy. Please do accept the invite. If you are in a noisy environment, let me know so I can cancel the invite. Okay. Hey, I'm glad, Debbie. I'm glad to always dish out value to you guys. Like it's a lot. It's a lot. I'm just happy everybody learned a few things on this webinar. We'll be implementing it right after and you see, has Chooks and Kelechi had said, demo will take you nowhere at all. Like it's just paper money. You're making money. How do you flex on your friends if it's paper money? It's not possible. You can't flex off paper money. You can't. Those big flex, you can never do it off paper money. Like it's just paper. It's virtual. You can't take it. It's not for the taking. And the only way you can flex off making money is by making money from the financial market, trading the live account. So I hope you take actions. Okay. You don't just think about the fact, or you don't fantasize about the money you can make from the financial markets. You can only make money by doing the right thing, stepping up and taking actions. So I think Ikena doesn't want to accept the invite, so I've gladly cancelled the invite and still want to see the response I get on polls. Like we have 14 on this call. But to take a few minutes for you guys to respond to the polls for me, like it takes just little time to respond to the poll. Okay, just little to respond to the polls for me. Okay, and yeah, thank you so much for joining me on this webinar. Like I said, there's a webinar prepared for newbies on Saturday, and possibly I'll do more Saturday classes as time goes on. Possibly I'll run a survey on that and see what you guys think towards that, and we get that implemented also at our end. Once again, thank you for joining me. I'm glad we all got to talk, share value on the call. It means a lot to us at Eagle Global Markets, and good luck and good trading.